One of the largest banks in the cryptocurrency industry, Silvergate Capital Corp., had a run after the FTX crash, requiring it to sell assets at a significant loss to cover roughly $8.1 billion in withdrawals. Hello and welcome back to your favorite channel, the Amuse World. Give the video a like, share it with your friends, and subscribe to our channel if you think it adds value. In this video, we're going to expose the reason behind Silvergate's meltdown and how you can protect your money before it's too late. One of the largest investments made by a U.S. bank on cryptocurrency was made by Silvergate Capital Corp. Now that it is struggling with a deposit run and a substantial loss, there are even more concerns that the financial system may be affected by the collapse of the crypto exchange FTX. Jared Shaw, an analyst at Wells Fargo & Co., wrote in a note following the company's statement that the worst-case scenario seems to have come to pass for Silvergate. Silvergate's stock fell by a record 48%. Parts of the financial sector are being affected by the shocking collapse of Sam Bankman-Fried's FTX cryptocurrency business, which was followed by his arrest in the Bahamas and extradition to the U.S. last month. Federal authorities claim that the overall financial system is mostly unharmed, but the breakdown, which resulted in billions of dollars in losses, has prompted calls for watchdogs to stop repeat disasters. Investors have grown anxious as a result of the losses, and U.S. watchdogs have taken notice because of worries that some banks rushed into the digital asset market. Silvergate announced recently that it is eliminating jobs and ending one of its cryptocurrency projects. This occurred the same week that three main U.S. regulators warned lenders that uncontrolled risks cannot be allowed to taint the financial system, and that the agencies will proceed cautiously with any new venture approvals. Sultan Megji, a former chief innovation officer for the Federal Deposit Insurance Corporation, said in an interview that all banks with connections to cryptocurrencies are likely going to face an increased level of oversight from examination teams in light of the regulator's joint statement and the issues that have arisen from FTX relationships. Regardless of whether it has been made public, Megji believes there is a serious effort to entirely remove cryptocurrency from the U.S. banking system. Risk control. 2 weeks prior, the Federal Reserve, FDIC, and Office of the Comptroller of the Currency chimed in, stating that it is crucial to stop risks from entering the financial system that cannot be regulated. A spokesperson of the FDIC said the organization doesn't comment on open and running institutions. Representatives for the Fed and OCC declined to comment on Silvergate. The difficulties of Silvergate should serve as a warning to lenders looking to expand into the digital asset market. Bank of New York Mellon Corp said in October that it would create a digital asset platform in the U.S. to enable some clients to keep and transfer Bitcoin and Ether. This is in contrast to the majority of the country's largest banks that have refrained from entering the market. The custody bank strategies are distinct from the ones Silvergate provides as a lender accepting deposits. After the bank said that it had laid off 40% of its workforce and lost $718 million on the sale of securities and related derivatives to fund customer withdrawals, which amounted to $8.1 billion in digital asset deposits during the fourth quarter, shares of Silvergate fell. Digital affirmation. The business declared that it still believes in the industry for digital assets and is dedicated to keeping a very liquid balance sheet with a strong capital position. According to Chief Executive Officer Alan Lane, we took commensurate steps to ensure that we were maintaining cash liquidity in order to satisfy potential deposit outflows in response to the rapid changes in the digital asset industry during the fourth quarter, and we currently maintain a cash position in excess of our digital asset-related deposits. On an investor conference call, the CEO said that a larger bank looking to enter the cryptocurrency market might potentially approach Silvergate for acquisition. As we can see now, it's difficult to maintain a business that is so concentrated. Therefore, it always made sense to be a part of a larger, more diverse institution, according to KBW analyst Mike Perito. I think them being a sale candidate was always a factor, he added in an email.